What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we are going to be covering the SoFi stock. And guys, I have to be completely honest, I'm getting very excited for this next upcoming earnings. It's not exactly being excited for the Q2 earnings itself. It's more of being excited for what SoFi could potentially do in the back half of 2024. Because like I said in my video yesterday, to hit some of these comps that they've said they are going to hit, Q3 and Q4 have to be some blowouts. Some type of growth has to really happen in the second half of the year. We don't exactly know which route they are going to go because of macro, but understand they got to pull that growth out of their, tails somewhere, and I believe they're going to be able to figure it out. So guys, I'm very excited for that earnings. This YouTube channel, I took off about 2 months, but I'm really getting back into it, guys, of course, because we got the 1 month countdown, and I'm really locking in. I've been following the company very closely. There's a lot of opportunities waiting for the SoFi stock. Mortgages are a big one out there. Student loans are also a big one, and of course credit cards. They've been trying to get their defaults down. I think we topped out at around 14-15% range, dropped back down to 11, and then jumped back up to 13%. So they brought in some big players from like a Wells Fargo, been with that bank for a while, running their credit cards. I forgot the guy's name, but it looks like they are really trying to go all in and scale that business because there's great returns. And, that could be where we see some big profits come in the back half of, Q4 if they can cut those losses down. But guys, SoFi right now had some big awards today come out. We're going to be covering those in this video. And also we got a buy upgrade coming in today. I don't know if it was an upgrade. It might have been a reiteration, but we'll double check that. But understand you might be seeing more of these in the next 2 to 3 weeks. I'm very accurate on this. You might see 5 analysts come out before the upcoming earnings, 1 week or something like that. Could be sell ratings, could be buy ratings, could be neutrals, but those should be coming out very soon now that they have announced their earnings. So guys, very exciting times for the SoFi stock. And understand right now, guys, SoFi, once again, there's been a lot of difficult situations for the stock. More specifically, the last two was the convertible note deal. That was a big pain. It took 2 months to get out of that. But of course, it's going to help SoFi in the next couple of years save a lot of money on interest payments, and then of course the insider selling out. But understand another big one. A lot of sectors that you've seen, or a lot of stocks that you've seen run, are the two biggest sectors. Crypto. SoFi pulling out of crypto because of bank regulations. That's a massive opportunity that we missed out on. And then the second one, AI, artificial intelligence. SoFi does not really hype it up. It's not really classified as that because of the bank. But Galileo has said that they are working on a lot of artificial intelligence. They're just not the company, and this is not the management to go out on Twitter, continuously talk about what they're doing for AI. So, just having that type of management and pulling out of crypto, we have missed out on the two biggest opportunities of the last 18 to 24 months. AI and crypto. So that's another big reason why the stock is also flat, as the SoFi company has continued to grow out of their unprofitable SPAC stage into now a profitable company, going on not one, not two, but 3 quarters in a row of profitability. Guys, if you watched my video from yesterday, the way SoFi is about to scale their earnings from negative net income 2023 to positive potentially 800 million in 2026. I think there's an opportunity for SoFi to get into the S&P 500 in the back half of 2025 if the company can get their stock price and the market cap of 15 to 18 billion. And of course, with the 1 billion outstanding shares, guys, that's a $15 to $18 stock price to send this company into the S&P 500 over the next 4 quarters, guys. We'll be on 7 quarters in a row of profitability. You just got to get that market cap up. Of course, we got a potential opportunity for rate cuts in the back half of 2024, one and potentially one or two in 2025. More things that could get the other business segments for SoFi running up. So let's cover the news today, guys. Once again, be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be keeping you updated. I really appreciate the support. Really appreciating the views and the comments from yesterday's video, guys. You really allowed me to bounce back really quickly on this YouTube channel, so I really thank you. Let's get into it. All right, guys, we got the SoFi stock right here, and you can see it was another wild ride today. You can see the stock was up a little bit in the pre-market, got hammered down, 2% or so, and then bounced back at the end of the day. Actually finished green and is actually up in the after hours, 649. Guys, I'm telling you, I've been following this stock for the past forever, but I'm talking specifically the last 2, 3, 4 weeks. I mean, this stock has hit 649 and bounced off 649, like just selling off crazy like 10 times. I'm not even kidding. Like, there is an algorithm out there literally programmed to just stuff this thing at 649, and it's happened a dozen times, guys, and you can see it's happening in the aftermarket right now. It's just crazy how bad, how much manipulation it is with this 650. They just want retail to continue to give up and sell out the closer and closer you get to more profitability, better earnings. It's just a mind game, and I'm telling you right now, the shorts are definitely winning because this thing has been skyrocketing from 10% to 18% plus short, the past 3 years as a public company. So we got to get out of this, but understand, the big news today was, of course, the upgrade, the buy rating that came in. And I think retail saw that, bought in pre-market, and then boom, you get a bigger sell off because, that's just exactly what retail doesn't want to see is a sell off on a buy rating. Perfect tactic to, big institutions to steal up some, big shares. And I believe that's what happened early on today. So check it out, guys. We got Needham analyst Kyle Peterson reiterates SoFi with a buy and maintains a $10 price target. This news is fueling the stock this morning into a red sell-off. I was just, trolling, clowning around, but yes, the stock was red 1%. I think it dropped even more to like 2% or something like that. You can see he's a solid analyst, about 3.5. He's ranked about 3,000 out of 9,000. So, yep, that'll give you about a 3.5 stars. So maybe this dude is really hunting down. He wants to get his star ranking +4. Maybe that's why he's going in with the buy rating. He thinks he's going to get his reputation boosted up. But, there's a lot of comments in here. If you guys want to be entertained, there's 17 comments. Go read the comments and just see the sentiment behind the SoFi stock and what people are truly feeling. Because I'm telling you right now, guys, it is not very bullish in my opinion. Some people in my video yesterday said that I wasn't very, excited, uplifting, and, that's a reason to buy. So it's just a mixed shift of, different situations of, what different types of retail investors are seeing. But overall, the sentiment, in my opinion, is very, very bearish because people are selling out of their positions left and right. Big people on YouTube, big people on Twitter, and, they have their reasons because the stock is not performing. But guys, we got $10 price targets coming out right now. And once again, guys, I would like to cover these call options because I believe it is very important. I say call options. I don't even talk about put options because I think, the call options are such a big target on the SoFi stock with retail because, these have been getting burned for 3+ years now, guys. I mean, just $12 calls, $15 calls, $20 calls, leaps the last 3 years. Absolutely nothing because look where the stock's at right now, guys. $6. So I just want you guys to see in my personal opinion, where we could potentially be headed because I'm just looking at the next 4 to 6 weeks, guys, and you can see the total open interest is pretty dang low these next 2 weeks, ending Friday, 88,000 open interest, 58,000 on the calls, 70,000 open interest the next week, and then 53,000 on calls. So, I believe, in my opinion, if you see this, big call option week right here, July 19th, I think if we get past this, they're going to potentially let this stock move up a little bit 10 days later heading into earnings because the next 3 weeks call options are very small as well. So guys, this is a big one right here. Just look at this, entire expiration date, July 19th, okay? Puts aren't even that high. It's the calls that are just out of this world. 345,000 open interest, guys. I just like to, make it past, this July 19th. So in my opinion, we could just get smoked. We could just get smoked the next 3 weeks. 640, 670, 630, 680, 630, 680, just backing down, just, destroying puts and calls. Okay. So in my opinion, I think, these could all get burnt up, but I'd like to see the stock gradually move up heading into earnings. So this is a big one to watch, guys. I mean, this is, almost, quadrupled what the calls are this week. All right, guys, and I want you to see this. This is a post I just put out. I said, oh my God, it's happening. There's so many different ways to value SoFi, of course. I've heard it all. I've heard PE ratios. I've heard tangible book value. I've heard price to sales. I've heard, debt to cash. The list just goes on, guys. But take a look at this. A very simple metric. We're talking about revenue, guys. Price to sales. Holy crap. I have literally 3 of the top 10 banks, probably top 6 banks in America, the price to sales going on revenue, SoFi has officially dropped below the legacy competition when we're going off straight up revenue. This is what happens when you have a growth stock like SoFi, once trading at a 20 times sales and just stays at the exact same level, $5 to $8 for 3 years straight. You have officially dropped under the legacy market. JP Morgan 3.7x, Bank of America 3.2x, Morgan Stanley 3.0, and SoFi 2.9x, guys. We are literally officially lower than the legacy banks when you're talking about straight up revenue to market cap, guys. Holy crap. This is something to think about. I mean, it's got a good amount of views, but this is a crazy metric that we have officially went under legacy markets. All right, guys, we got Anthony Noto coming out with a great post, guys. Motley Fool. This is a big platform. I don't know exactly how many people are on the platform, but guys, they do a lot of marketing. They have a lot of subscription. Excited to see SoFi listed in Motley Fool's safest banks in the U.S. rankings for July 2024. Appreciate the recognition of our commitment to security and transparency as we build the future of finance. We're going to click into that, but guys, I want you to go take a look at my comments that I drop below, and go save a comment if you want to get Anthony Noto's attention, because we know Anthony Noto, they are delivering on the earnings, triple beats across the board, increasing guidance slightly, but we know that Anthony Noto and his team had a lot more excitement in Q4, more uplifting, a little bit more aggressive, and then Q1 they just went straight into banking metrics, fair value accounting, and just selling their loans. They just went straight banker mode, just a lot of mathematics and accounting, and they just lost, the drive, that they really had in Q4. So you drop it down, take a look at my comments. I said, call shorts out next earnings call like Carp did at Anthony Noto, because we know, Carp, just a couple of quarters ago, I think it was 2, he was talking about, hey, these guys are just shorting for pointless reasons. They just need money for their, I don't want to say it, but what I'm talking about, the C word, but yeah, exactly. YouTube, I don't want to get crazy on YouTube, but yeah, that's what I'm talking about, guys. Carp calling those guys out for, the bad habits that they're doing inside of the market. And then looks, Palantir, absolutely skyrocketing. And then you can see I also put, hey, we're also the most shorted bank in US July 2024. So you can go favorite a comment, comment back, get Anthony Noto's attention on what you want to see in this upcoming earnings. But hey, I want to see him, call these shorts out, because the short interest is literally rising to new record levels every single quarter. 18%. I think Anthony Noto needs to put the fear in these guys and really tell them what they're missing, what's wrong about their short articles and stuff like that. If you made it to the video, I want to say I really do appreciate it. I enjoy doing these videos for you. Once again, guys, I'm very excited for this upcoming earnings. I'm gonna be doing more videos for you leading up to this Q2 earnings. I really appreciate the support. When I came back yesterday on that first video, you guys really get me going really quickly. So I really appreciate it. So be sure to smash the like button, drop a comment. Don't forget to subscribe to the channel. We're going to be bringing you more videos. Once again, my name is Kyle. Hope you have a great day.